Good day everyone, trust you're doing well today. Today we're talking about current most active moving stocks in the NGX and why. Now the biggest surprise for last week was UPDC. According to the market data, UPDC gained about 38.5% in just 1 week. That is a very big move. Now whenever you see a stock, jump this much in a short time, don't immediately think it means the company suddenly became, much better overnight. Sometimes the reason is something called speculation. Speculation means, investors are buying because they believe something good might happen in the future. It's based more on expectation than on confirmed results. Think about it this way. Imagine someone tells you that land in a certain area may become very valuable because a new road might be built there, right? So people may, rush to buy land before the road is even built. This is what speculation is. Something similar can happen with stocks. Many investors may believe that a company has good days ahead, so they buy early. If enough people do the same thing, the share price rises quickly. But here is something many beginners forget. A stock that rises very fast can also fall very fast if those expectations are not met. That is why smart investors always ask one simple question: what is actually driving this move? Is it real business improvement or is it just excitement? That question alone can save you from making expensive mistakes. Now, let's move to another stock that had a very strong week last week, and it's ETERNA. The stock reportedly gained around 32.8%. Unlike UPDC, this move appeared to have been supported by strength in the oil and gas sector. Nigeria is still heavily connected to oil. When investors believe oil companies could make better profits because of stronger business conditions, money often starts flowing into companies within that sector. This is what people usually call sector rotation. Now, sector rotation simply means investors move their money from one industry into another. Think of it like people leaving one busy market and entering another because they believe better opportunities are waiting there. 1 month it could be banking, another month it could be insurance, the next month it could be oil and gas. The money keeps moving. Now, if you learn to notice where the money is going, you are already thinking differently from many new investors. Another interesting story also came from the insurance sector. Normally, insurance companies don't always get the biggest, headline, but last week something changed. With the new recapitalization just concluded, several insurance companies appeared among the market's, strongest performance. Companies like CUSTODIAN gained about 10%. NEM also gained around 10%. Cornerstone Insurance moved higher as well. When several companies from the same sector begin rising together, that usually tells us something important. It suggests investors are not only buying one company, they are actually becoming interested in the entire sector, the entire industry, so to speak. Now, does that mean every insurance stock will continue going up? Not at all. Market never move in a straight line. Prices go up, prices come down, then they go up again. The important thing is understanding why investors are suddenly paying attention to that sector. Now let's talk about Cadbury. Cadbury reportedly gained more than 26% last week. Consumer goods companies often perform well when, investors believe consumer spending could improve or, when earnings expectations become stronger. Consumer goods simply means, products people buy regularly. Things like food, drinks, and everyday household items. These businesses are usually easier for ordinary people to understand because we interact with their product almost every day. Now let's discuss stocks with unusual high trading volume. According to last week, data, CHAMS traded around 60 million shares per day. That is huge. Japaul Gold also recorded very high trading activity. Afriprud attracted more than 16 million shares on average. Jaiz Bank also remained very active. Now, here's the important part. High trading volume does not automatically mean the stock will continue rising. It simply tells you many investors are interested. Sometimes they are actively buying. Sometimes they are actively selling as well. Sometimes both happens just at the same time. This is why experienced investors often look out for both price movement and trading volume together. If prices rises while trading volume also increases, it often suggests stronger interest from that market. But if a stock rises with very little trading volume, some investors become very careful because that move may not be as strong as it appears. Now let's take a step back and look at the bigger picture. What story is the market trying to tell us? First, investors appeared willing to take more risk. That's one lesson learned, because we saw strong buying in several smaller companies. Secondly, insurance stocks attracted attention across multiple companies instead of just one. Third, Oil and gas remain important. Fourth, consumer goods also showed sign of recovery through stocks like Cadbury. When different sectors begin showing strength at the same time, it usually means investors are actively searching for opportunities instead of sitting on the sideline. But this is where discipline becomes very important because many beginners make the same mistake. They see a stock that has already gone up by 30% or 40%. Then they rush to buy because they are afraid of missing out. That feeling has a name. It's called FOMO, fear of missing out. Almost every investor experiences this. The problem is that buying simply because everyone else is buying is really a good strategy. Instead, ask yourself these questions. Why is the company going up? Is the business actually improving? Are earnings growing? Is there real news supporting the move? Or is everyone simply chasing excitement? Those questions can completely change the way you invest. Remember, investing is not about buying whatever is already popular, right? It's about understanding where value exists before everyone else notices it. Finally, let's remember one very important lesson. One good week does not guarantee another good week. Markets move in circle. A stock that performs well today can slow down tomorrow. You should understand that. Another quiet company that moves in silence may suddenly become the next, market leader tomorrow. This is why successful investors spend more time learning than chasing headlines. They study companies, they watch sectors, they follow earnings, they understand why money is moving. And over time, that knowledge gives them an advantage. So, what is the biggest takeaway from everything we have discussed today? The Nigerian market is giving us clue. Real estate attracted attention. Oil and gas remained strong. Insurance suddenly became one of the hottest sectors. Consumer goods also showed fresh signs of life. These are signals worth watching, not because they guarantee profit, but because they tell us where investors are currently placing their money. The market is always telling us a story. The question is, are you simply watching prices move or are you learning how to read the story behind those prices? That's one difference can completely change the way you invest. If you enjoy this breakdown and want more simple explanation and stocks to buy, when to sell, I have a Telegram channel where I share frequent market tips, insights to enable you beat the market. So if you're interested, you can find a Telegram link in the description box of this video below. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.